Good morning, good afternoon, good evening, whatever time of day it is, wherever you are. Welcome to today's Grain Market Blast with myself and the glamorous with a capital G, Angie Setzer, where Angie will be providing us with a rapid roundup of the latest pricing flows and market moving news in agricultural markets. But before she does, I'll get the legals out the way. So as usual, nothing discussed on the Spaces session constitute trading or investment advice or refers any kind of endorsement by PIQ, myself, Brian Paisley, or indeed Angie Setzer. And I will apologise if someone can hear some slow jazz in the background. I've found myself a nice little quiet spot in the corner of a hotel bar in Central.
If you hear some slow jazz in the background, it is Friday afternoon, and Ryan he's on his way to the weekend.
I'm tuning the Grainies in.
That's it. I don't blame you. I also am that. No, I'm really not, but it'd be cooler if I was. Happy Friday. Can you believe it? We made it here.
I can't believe it's Friday. I can't even believe it's July.
I can't. I'm still stuck in like March. Like I know it's summer, right? But I don't know how the heck we've got here so quickly. But it's another Friday, so like I'm just whatever. And here we are. Market's up again this morning, and I am ready to get hurt again. Is how I feel every time I come in because I'm basically Charlie Brown, and this market's been Lucy with the football right. For a couple months here now, if not longer. It feels like so. But we've got several different things that are happening. And a couple of them are some, it's one of those situations or one of those things where suddenly you see, the conversations that we've been having, like you and I have talked about, and I've said it about 1 billion times over the last 2 months or whatever, where it's like, okay, balance sheets are one thing, grain flow is another. And we're starting to see this come to fruition in a big way. Like I've got two different, folks that I really lean on, like they're very well respected in their own right, in their region, when it comes to cash market analysis and reporting what's going on in trades and all of these other things. And both of them, one from South America and one in Europe and in the Black Sea, both are talking about this cash, short squeeze. There's a short squeeze happening. And so, one of the situations that we've had here, one of the things that I've been kind of talking about, and one of the things that a lot of folks have been talking about, and I think they've been misreading it to a certain extent, is you've had all of these end users kind of sitting around waiting for the farmer to have to puke. And so in Brazil, you have very, very limited ending stocks at the end of the year. You had seen at the end of their marketing year anyway, like they had a bit of a reduced crop last year. They have much larger, it appears, domestic demand than what a lot of folks had anticipated. The other day during our conversation, with Eduardo, he had mentioned, Brazilian domestic demand as high as 95 million metric tons. That's well above what we've been thinking for a while here. The USDA has it at 93 million, but a year ago they were at 85, I think 91. They bumped it up. But, you're seeing this sort of absorption in the Brazilian market that traders weren't anticipating. Flip it over to the Black Sea. Same sort of thing. We're not getting the harvest pressure everyone had anticipated. You're seeing somewhat of an inverted cash market, more inverted in Brazil's corn, than potentially in the Black Sea. But you just aren't seeing this puke, this push of bushels, and that has a huge influence on how this market's able to move and whether or not cash traders are able to cover, what they're trying to source. So there's a few things that we're watching there, and it really leads to the U.S. continuing to be the cheapest, supplier of wheat in the world market, which is typically not something we see happen. For the longest time, we've been talking about how the U.S. is the world's granary. I say it's the world's booty call, like, 2 a.m. you up, I need some wheat, kind of deal. And that's basically what we usually are. And so to see the US be the cheapest, available origin, to be the quickest, able to ship some of these other things, it's just a little surprising. And definitely something that we'll be watching. Now, obviously, you could see harvest pressure, come about. You could see a push. You could see some of these other things happen. But with the way the currency is trading, with how much money the farmer is losing around the world, which I think is a hugely important factor that folks are kind of not taking into consideration when thinking about how grain is going to come in to the pipeline. You see these sort of things, and so here we sit. But you have seen a continuation of strength in cash versus futures, and so that'll definitely be something that we continue to watch here over the next couple weeks. Any questions? Sorry, that's a lot.
Do you know what? Actually, yes. So
Good.
I remember. So two. It's a two-part question. Firstly, because I remember you were saying it might have been. Oh, it's Friday already, so probably this week. Maybe Monday, Tuesday. You were saying like an old hand that you knew that when you first started. It was always he was saying that always keep an eye on the cash price because even
Yes.
if the futures have been weak, if cash is strong, that's overall bullish
Yes.
the kind of the landscape, right? So that's
Yeah.
correct. And the other part. Are we still in? I remember a couple of weeks ago we kind of likened it to kind of the Mexican standoff situation with
Yes.
producers and but is that's kind of where we still are, right?
We're
Everyone's still going
starting to see that the producer right now is winning that. So yeah,
right.
that's
Got
so
you.
we've been talking about it, and there'll be some analysts out there that'll be like, the producer never wins. Eventually, they haven't sold, they're going to have to, whatever, blah blah blah. But at this point in time, the lack of movement into the pipeline, the lack of aggressive movement into the pipeline that people
Yeah,
were anticipating, is catching them off guard. And so, what happens then is, like I've said before, as an end user, your only job is to make sure you don't run out of product. And
right.
so,
Yes,
if you start to pay attention, if you're watching as a merchandiser and you're starting to pay attention that, okay, every time I turn around to add coverage 2 weeks later, my price is, like if you looked at the Algeria tender, right, their price increased 35 cents a bushel almost,
yeah,
in 2 weeks time. And so and futures had collapsed in the meantime. So that is like a shot across the bow. It's something to be paying attention to. I'm not saying that we don't have, decent amounts of supply sitting out there. But and eventually, it could cause some issues depending on how it comes into the market. Like
got you.
it could cap rallies eventually. Like there's certain things that you have to be aware of. But right now, to really kind of say that we have to push lower, when we have the signs that we have in global cash, I just, we'll see. On the flip side too,
Side note.
yes.
So aren't you proud of me for remembering this and staying up to speed?
I am. I am so proud. Look at you. It's
Gold
just
star for
it
Ryan.
sinks in. Yes, so you're gonna. I'm adding it to the chart right now. You've got a smiley face sticker.
Yeah.
So yeah. So next thing in line too, kind of maybe in line with market, price drives sentiment or sentiment, like that sort of thing, where it's like, oh well, we're rallying, so I'm going to tell you, all of these bullish things. But we are seeing too some conversation about weather concerns. We're seeing some more. You look at the CPC from the National Weather Service, the Climate Prediction Center, over the next 8 to 10 days, or 8 to 14 days, excuse me. They're calling for above normal temperatures, below normal precipitation in some places. I mean, it does look like you're going to see a continuation of some pretty hefty storms. But there is some talk now, and again, there's sort of this attitude amongst analysts that will scoff at this. But amongst the agronomists that I talk to, who I trust, like I'm going to trust the agronomists far more, with their assessment on what's taking place, sorry, analysts, than the analyst. And so there is some talk of different pockets of the Corn Belt going backwards. There are some concerns over some pollination issues in certain spots. We do have some heat, like I said, in the forecast coming up. Is some talk that August could turn off hotter and drier. That's been part of what supported soybeans. And so, part of the reason that I got so butthurt or whatever here a couple weeks ago when people started to throw out these really, really high yield estimates is just the second week of July is early. Like I can understand, forecast looks okay, like all of these other things. But I work with one of the growers who holds one of the records for corn production, in the National Corn Grower Yield Thingy Majiggy. And we had a conversation a week ago, and he's like, people are underestimating what it takes to outpace your record yield, by what they're forecasting. Like weather is only one piece of the pie when it comes to producing a corn crop. It's a big one. No, don't take this the wrong way. But when it comes to being the difference between an adequate or maybe a slightly above average crop and one that blows a previous record out of the water, uniformly across the country, like I do believe that we're starting to have this sort of assessment of, whoa, I don't care if your model says 191, like that is really hard to accomplish sort of deals. So we'll see. Like I said, maybe that's just me having my thoughts and my sentiment influenced by price. We did have a nice key reversal to start the week and some of these other things. But I do feel like there's a bit of a shift in sentiment where it's like, okay, we've kind of factored in what happens if it's a 185 and demand is maybe a little lackluster. We haven't even thought about what if it's a 178, maybe a million acres lost and demand maintains this current pace. And so I don't know. When I grew up in this market, we used to talk about ranges and potential, ranges. Anymore, it's just like, oh, well, I'm going to give you my high side estimate or whatever. So we'll see if that shifts. Lastly, I had heard from a couple different industry folks that they are really excited about who has been nominated for the agricultural trade representative or trade negotiator for the USTR. Apparently super solid background in ag, really surrounded by some good folks. So they're happy about that. There's also some talk that we're seeing a conversation with the EPA from these small refiners that are saying, hey, if you grant these exemptions, you have to replace the RINs or whatever. And it is above my head. Like, I apologize. I'm still trying to figure it out. I asked my friend in the industry to bust out the crayons. But basically, like, his explanation is that if you bring RINs back out, or basically like if a small refinery is required to replace these RINs, they have to go out and buy more, which drives up the RIN price. The D4 RIN is a major factor in biodiesel and renewable diesel profitability. So if the government I'm just reading this direct from him because I'm not going to try. So if the government mandates the replacement of old RINs, prices rise, RIN margins improve, and that incentivizes plants to process more soybean oil, which in theory pushes up soybean prices. So that's what you saw yesterday. Soybean oil was up about $1.40, I believe, or 140 points, whatever. I'm not a soybean oil expert. But then you've also seen that support come into beans. And so like I said, I truly feel like you've seen, and I caution to say this, but I really do feel like you're starting to see a sentiment shift and a conversation shift, more from oh my God, demand is overstated and supply is understated to, all right, what if supply is accurate? Or maybe what if supply could be slightly, I think supply accurate, maybe slightly understated, but what if demand maintains this pace, if not grows? And so I think that's important, and I will shut up now.
Well, I wish you wouldn't. I value every second I can get. But Angie, thank you so much again, as always. You know how much I appreciate you doing this with me. And I'm sure our listeners appreciate you equally. But yeah, thank you for another great week. Listeners, thank you so much for tuning in. We really do appreciate you. Whatever you're doing, be it in front of a trading screen or be it out on the fields, look after yourselves, keep it tight, be safe, and we'll see you all on Monday. Have a great weekend.
Yeah, you guys too. I just realized I didn't even talk about the trade deadline extension. So I guess we'll touch on that on Monday. So have a great weekend, guys.
It will be changed over the weekend anyway.
Exactly. So have a good one. Thanks for tuning in. We'll talk to you guys later.
See you later.
Bye.